Remarkable. I mean, I hope you saved that tape, because 4 months from now, when they renege on this, all right, and Uber goes back to war with them, he'll wish he hadn't said that.
Yeah, it's amazing.
I'm serious. This is not you. Dick Grasso would be a superb mayor of the city of New York. He loves the city. He has enormous respect for the people that serve the city, the cops, the firemen, the sanitation drivers. This is the kind of a person that should be in public service.
Will you do it?
No.
This is the kind of a person, not the person.
But I'm serious.
This is hilarious.
Until we figure a way out to attract the Dick Grassos of America, we're not going to fix it.
Let me ask you about the New York Stock Exchange, Dick. I mean, when you were overseeing this great institution, you had, what, 5,000 people on the floor. You had 5 rooms. You go there today. It's like, look at this. This is a live picture right now. Look at that picture. Unbelievable. And you're talking about how many people on the floor right now? 300? Down from 5,000?
On a big day.
On a big day, it's 300.
Big day.
What happened, Dick?
Well, look, technology obviously displaced a lot of the people factor. But what unfortunately also happened, some very bad regulatory decisions in the period 05 through about 08, which basically said the new national market could convert from a free market process to a free-for-all market process. Today, IBM trades in 60 different locations. No one can tell me what the last sale in IBM is. No one can tell a small customer you got the best execution at the time you bought it or you sold it. And that's a crying shame. I'm not arguing to put 5,000 people back on a trading floor. I am arguing that the regulators have fallen down by not mandating the ability to know the highest bid, the lowest offer, and the fact that...
But you don't think that we're getting more efficient pricing in the markets today because of technology?
Absolutely not. Absolutely not.
That's contrary to everything, every study on the market.
You are getting cheaper executions.
Yeah.
Okay.
That's different. You know, there's a difference between speed, cost, and quality. Quality of execution means I can tell you, Sandra, you sold your stock to the highest bid, whether it was on the New York Stock Exchange, in NASDAQ, or 58 other places. You can't get that guarantee today. When Arthur Levitt, and I'm not proposing we bring Arthur back. I mean, Arthur had a wonderful run as chairman of the SEC. He said, best execution is a rule. You've got to be able to tell your customer you sold it at the best bid, you bought it at the best offer.
Can they ever get it back? Has the horse left the stable at this point?
Yes, they can. Yes, they can. Not by putting 5,000 people on a trading floor, but by linking these 60 different entities, the fully disclosed, the semi-disclosed, and the non-disclosed, stream the data to one central, if you will, vendor, and so the public can say, highest bid, I hit it.
It's a
lowest
shame.
Offer, I take it.
It's a big
You're
shame
an institutional money manager. That's got to be appealing to you, Keith.
Yeah, specifically the liquidity side of that trade. I mean, that's the biggest part. If you're just looking at the surface and the lower commissions, fine. If you don't see anything underneath, you're just an idiot. You've never traded a market in your life.
There used to be a measure called B&B. Brokerage, the cost, if you will, that you pay the broker, and breakage, the number of times you miss selling at the best bid or buying at the best offer. No one calculates in those studies, Sandra, breakage. Breakage is enormous.
I just thought that they studied liquidity and the increased liquidity that electronic trading brought, therefore better price discovery.
There are enormous benefits to electronic market making. I served on the board until recently of an electronic market maker. All right. That's different from electronic scalping, okay? And let me tell you something. Just look at the most actively traded stock today and ask yourself the question, how can a stock trade 100 million, 200, 300 million shares and there never be a bid for more than 1,000?
Dick Grasso, Ken Langone, it's been a pleasure having you this morning.
Thank you.
Thank you so much.
Thanks, guys.
Appreciate your time today. Thank you.